Mary Catherine Ham, Brian Wilson, Brian Neiman, today's newsmakers, and you, the Morning Majority. 105.9 FM, AM 630, WMAL.
It is 8:37 on the Morning Majority. Wilson, Neiman, Ham. We're all in our proper places, and on the phone right now, our good friend Larry Kudlow, host of the Kudlow Report on CNBC and the Larry Kudlow Show on WMAL, Saturdays at 7 p.m. Larry, good to have you with us.
Good morning, Brian. Good morning.
I want to ask you about your latest column, which you say you believe we are on the front end of a recession.
Well, that's been my mantra for a while. Anytime you get down to 1 or 2% growth, you're on the front end of a recession, and it's sort of hard to know when that's going to occur. And I haven't actually made a recession call. I don't think we're actually in one yet, but we've had zero consumer spending and zero jobs in the month of August. Lots of data points come out. We had an ISM manufacturing number yesterday, which was barely above 50. It was 51 and change. Still, it looks pretty creaky to me, and the message of the stock market is certainly an ominous message. We're pretty much in bear market territory, and commodities are falling, and profits are in jeopardy. So I don't know that we're in a recession. I can't make that call, but I have been warning for a while.
So we've been bouncing from about where we are now, which is, 10.6 on the Dow, to around 11.6 for some time now. Is this the place where we either go down or bounce back?
Yeah, we'll either go down or bounce back.
Well, I know, but it's a silly question. But I mean, many times I've been, man, it looks grim, and then a couple of days later, it'll bounce back 400, 500, 600 points.
Well, that's very true, and the volatility is very high, and that's, by the way, not a healthy sign for a stock market. A lot of the stock market stuff is coming out of Europe, and the observation that I make here is that so long as Europe, the leaders in Europe, fail to fence off their banking system from a default in Greece or Italy, but mostly Greece right now, if they don't guarantee the deposits and the debt of those banks, then the contagion catastrophe is very much in play. And Greece looks to default. I know they have a bailout tranche coming, but every time they do something, their numbers get worse, and they have to cut more spending or raise more taxes. They're in a death spiral in Greece right now, and the policies are no good, and the IMF's not helping. But whatever, you don't want to see the lending banks, the major banks in Britain, Germany, France, and Italy, you don't want to see them going down, because if they do, then it's going to come right smack here to the U.S. It's a systemic risk. And the European leaders, in my view, basically have to do the sort of thing Tim Geithner has been suggesting they do. It's got to be an emergency rescue. And I think one of the lost aspects of this rescue is what was done by the FDIC and the Federal Reserve and the Treasury in the fall of 2008. They guaranteed money funds. Now, Europe doesn't have money funds, but they guaranteed the deposits of the banks. They guaranteed the debt of the banks. They guaranteed the overnight interbank lending of the banks so the system could unfreeze. And that was late, but they got it done, and that was the beginning of some kind of banking recovery. Europe has to do something like that with this $600 billion rescue fund, or add more to it, and I think they have to take very strong steps. And until that happens, I fear there's nothing but downside risk for our stock market and our economy.
Are we being hypocritical because we're asking Germany and the rest of Europe to do this with Greece specifically, but also some other countries? Because I don't know if we would have the political appetite to do that today here in the United States if our banks were failing like that.
Well, we had the political appetite to do it in 2008.
We did.
Whether we'd have it today, I do not know. I was never a big fan of TARP because I thought that was kind of a takeover of the banking system. But buying bad loans from banks, which was the original TARP, I thought was a pretty good idea. But I want to make clear that I did favor the guaranteeing of deposits that the FDIC took. Sheila Bair at the time, I absolutely favored that. And I believe Europe has to do something similar to that today. And until they do, then we're going to be subject to these, 2, 3, 4, 500 point swings every time you get a piece of bad news from Greece. And that's really taking its toll on our economy, which already is a balance sheet problem, right? Because housing prices are still at rock bottom. They're below where they were many years ago, and the stock market is almost 20% down. So you got balance sheet and wealth problems here. You had the oil shock, which fortunately is dissipating. But so it's not a pretty picture. I wouldn't make the recession call, but I would warn that we're on the front end of recession. And regarding policy, look, how dumb is it to talk about higher tax rates at a period like this? I mean, to argue, as President Obama has argued, that we should spend a couple of $100 billion more in infrastructure. We should have a temporary payroll tax cut for 1 year, which has no economic growth impact. And we should pay for that, so-called, by permanently increasing top rates for successful earners and investors and business people. It's just, that's a recessionary policy right there.
Are you worried about our banks? Specifically, I'm talking about Bank of America and Citi.
You know, I'm not overly worried. I think they still have asset problems on their balance sheet, and they're still working that down. And I'm going to be down there tomorrow interviewing Brian Moynihan, by the way, at the, what is it, the Newseum, I think that's what it's called.
Right.
And I'm looking forward to that. But I'm a lot less worried about them than I was 2 years ago. And in a stock market sense, they're probably undervalued. But it doesn't matter whether they're undervalued or overvalued. They're getting killed.
Right, I know.
And the reason they're getting killed is the European banks are getting killed. And the reason the European banks are getting killed is the reasons I argued before.
Larry, these Bank of America fees are making a big splash. A lot of banks talking about adding fees to checking. Basic story, they took, the Congress said you can't charge as much to retailers. Retailers lobbied them. They said, okay, we'll cut down on that. They're adding the fees elsewhere. Conservatives say, look, we told you the regulation would add to fees for people. And liberals say, look, we told you the evil banks would try and gouge poor people. Who's at fault here? What's the deal?
Well, I think the policy is at fault. The Dodd-Frank policy is at fault. Where I might add, Walmart defeated the Bank of America. Right? And putting limits on what the banks can charge the retail sellers, putting a limit on that, forces the banks to raise their debit card fees to users. Forces them, because it's an expensive business, and they got overhead. And I'm amazed. I don't know, you probably saw this. Does Obama blasting this?
Yeah, he said...
He says banks do not have an inherent right to a certain amount of profits. You don't have some inherent right just to get a certain amount of profit if your customers are being mistreated. My hope is that you're going to see a bunch of the banks say to themselves, you know what, this is not good business practices. What's he talking about? It's a profit maximization business. It's called capitalism. And if your costs go up, the only way you can continue the product is by raising the price of that product. Now, if banks compete with each other, if the bank down the street has a lower debit card fee, then maybe people will go there. But it costs you several $billion just to process these debit cards. So this is an example of bad policy and a president that doesn't understand how the market works.
Shocking.
And it's really fascinating. He says banks do not have an inherent right to a certain amount of profits. What is he talking about?
Then you have Dick Durbin saying to everybody, hey, if you got Bank of America, leave. Take your money out of Bank of America. And the people, and for a policy that he helped create.
It's just absolutely incredible to me. And the whole idea of the war against banks, going beyond Dodd-Frank, Fannie and Freddie suing banks, mortgage investors suing banks, states attorneys general suing banks over the the robocopy signing of the foreclosures. If we want an economic recovery, banks have to play a central role. Banks are the credit transmission in the economy. And if you're pounding the daylights out of them time and time again, or you're boxing them in, or you're over-regulating them in an expensive way, then they're not going to perform. Right now, their bank money, $1.6 trillion of excess bank reserves are on deposit at the Fed for 25 basis points, and they're not being loaned. So there you have it. I mean, we got what we deserve. We attacked the banks, and the banks aren't performing.
All right, Larry, great to talk to you as always. We'll do it again.